What's up, guys? This video is going to be on SMT divergences. This is something that I haven't gone over in any of my videos yet, so this might be new to some of you guys. If not, I hope this kind of just helps to understand it better if you already understand it. The first thing is going to be, what is an SMT divergence? So first of all, it's when you have two correlated pairs, like I trade NQ and ES, which are a correlated pair. You could trade some Forex correlated pairs, which I don't know anything about. I don't trade Forex, so I don't know what pairs are correlated and what pairs are not. But let's say you're trading two correlated pairs like NQ and ES. One makes a higher high like this, and the other one is supposed to create a higher high as well like this, right? So they're supposed to look like this. Let's say this one's NQ and this one is ES, right? So as you can see, they both made a higher high compared to here. This was the high, and then we made a higher high, and then same over here, right? Now, an SMT divergence is where instead of making a higher high, right, NQ makes a higher high, ES creates a lower high like this, right? Now this right here would be an SMT divergence right here. And this SMT divergence would tell us that we could go down, right? Now, I wouldn't base a trade completely off of SMT divergences, but it is a good confluence. If you have a setup and there's an SMT divergence, it makes it higher probability. So I'm going to go into the first example now on how I use them. Right here, you can see that we have a swing low, creating some sell side liquidity. And you can see if we play this out, we get a liquidity sweep here. Now, when we get this liquidity sweep, the way that we tell if there's an SMT is right here. We have ES, and you can see ES right here did not sweep this liquidity, right? So when you see that right here on NQ, we sweep the liquidity, and ES right here doesn't, then that is an SMT divergence. So now, right, I'm going to go back on NQ, and I'll draw out that we have an SMT divergence here, right? So now we have an SMT divergence. Let's see if there's a trade here. There's a fair value gap here, and you could take a trade off the inverse of this if you want to. It would be stronger than just a liquidity sweep, right? Because there's a liquidity sweep, which is one of the textbook things that we need for this strategy, which I taught about in the bootcamp or in my Discord if you guys want to join that. But you see this SMT divergence, and then we see here there's an inverse fair value gap. And if I were to take this trade on the 2-minute, this is the trade I would take. Full TP would be here. You could do break even, partial take profits, wherever you want. And this is how it would play out. Now, like I said, do we base trades only off of SMTs? No. Can we use them as an extra confluence? Yes. All right, and now here with this second example, you can see we just created a high on NQ, which creates some buy side liquidity. And then in these next couple candles, you can see that we sweep these highs right here. We swept this buy side liquidity. You can see here on ES, we actually don't sweep this buy side right here, right? The same buy side right here is not swept. So this creates an SMT divergence, right? So now we have an SMT divergence on the highs, which tells us that this is a confluence for shorts. So if I get a short setup out of this, then that will be a better setup than if we had no SMT. It just makes it a better setup. Like I keep saying, do not use SMTs as your only confluence for a setup. So for again for me, we have this liquidity sweep here, and if we inverse this for value gap, it would be a good short to maybe here. You could target here, right? So if I were to take this, my trade would kind of look like this, with a soft stop, with a close below this for value gap, or above this for value gap, I mean, because that's how my strategy works. Now let's see how this trade plays out. You can see like my strategy, right? We would enter off of this close below this fair value gap. You can see, boom, hits full TP, and that's it. SMT divergences are not that complicated. It's when you have two correlated pairs or two correlated assets and they don't do the same move. One has a higher high and one has a lower high. One has a lower low, one has a lower high. It's very easy to understand. It's just sometimes it may be a little hard. When I first started, sometimes it's a little hard to have two charts on your monitor at the same time, and that's just something you kind of get used to, is watching both. And if this video helped, please leave a like, subscribe, and if you guys have any questions, you can leave them in the comment section. You guys can join the Discord and ask me directly, and I'll see you guys later.